For the latest in the fixed income market, we see the Central Bank of Nigeria allotted about 894 billion naira in its latest Treasury bills auction, as investor demand that surged to more than 3 times the amount on offer. With a strong appetite for longer-term securities and rates holding steady, what does this signal about liquidity and market direction? Joining me for this conversation now, we have Mr. Bankole Odusanya. He's the chip dealer at Polaris Bank, and he joins me right here in the studio. It's great to have you, sir. Good morning.
Good morning, laddie.
So it's another day, another naira at this point, and we see this allotment here, about 750 billion offer, but raise was 2.36 trillion. So we have an oversubscription.
Oh, yes.
What's driving this latest one? I guess we're getting used to the oversubscription at this point.
Money in supply continues to grow as value continues to be created from equities returns from one side, dividends. This is the period. And then on the other side, from fixed income returns like coupons, corporates, and government bonds. We also have interest, very serious interest in Nigerian securities by foreign portfolio investors. This has refused to wane. This is the first time we'll be approaching elections in Nigeria where we'll be seeing more interest in our instrument, because in sub-Saharan Africa and what you call frontier markets, we have very high yields on our assets. Nigeria's risk premium has reduced given the reforms we have carried out since 2023-2024 on tax, FX reforms, and petrol subsidy removal. And yet, so I mean, those are the factors driving in the FPI's confidence. But the central bank has got it right by continuing to chase inflation targeting to ensure that rates are not cut too quickly, and ensuring that we continue to incentivize holding of the naira, such that when you hold naira assets or naira cash itself on fixed deposits, you are earning as high as 15%. On treasury bills, you are earning as high as 16 to 17%. On bonds, we think that bond market auctions that are coming up on Monday will be closing very close to as high as 17%. So incentive on the naira, money supply continues to grow, especially to institutional investors who receive dividends, returns on fixed income investments, and general profits being reinvested as retained earnings.
So technically, what we're seeing play out in the stock market, with that, bullish run, we're seeing so far, somehow it plays into, the fixed income market, because all of those gains need to go somewhere.
Yes.
But, normally there's this relationship. You say when the equities market is bullish, then attention from the fixed income market, shifts. Are we seeing that at all?
No. In a very efficient market, that's what happens. When people run away from risk, they run to fixed income for zero risk instruments. But this time around, generally, Nigerian assets are a bit underpriced given the reforms we have seen. And I mean, that's why I said that for the first time in a long time, towards the election, we're seeing, at this time, by 2011, 2015, 2019, we would have been seeing a taper down on interest from foreign portfolio investors. But it's not happening this time because the yields are high, and there's a lot of confidence in our markets because we have a free market where huge sums have come in, and we've seen foreign portfolio investors test the market, saying, okay, I want to pull out $50 million. And without a call to anybody, you speak to your bank, you get it same day.
So I guess
it's a very liquid market, and the prices are stable.
So I guess the FPIs don't really care much about what's happening in the political front, with all of the defections, all the talk about one-party state. They don't care about all of that.
No, the fundamentals are right, especially on the monetary. On the fundamentals, we have some room to cover, especially how we manage revenues. You saw the World Bank report, which was later pulled out, and then how we manage our infrastructure development. But on the monetary, we got it right.
Okay. So they'll take that.
Yes.
They'll take monetary policy.
Oh, yes. Sir.
All right. So what we're seeing for the 364-day bill, that attracted about over 2 trillion.
Yes.
2 trillion naira. What is this telling us about investor expectations?
Okay. The message on that is that that actually closed at the same level with the 180 days, 6-month treasury bill, 16.19, both closing at the same rate. You would expect that there won't be interest on the 1 year from FPIs because elections will be in January. You would expect them to wait out from the maturity, say from 6 months away from today. We're in April, going into October, they will just pull out. Nope. the demand was very high on one-year instruments. I expect the demand to be very high on FGM bonds. That will happen on Monday. Ordinarily, bonds should be back to 19% where we were in 2024. But as we speak, bonds are trading at 16.7 levels. And that in itself isn't the best of demands. When we get more aggressive demand, we've seen bonds go to as low as 15.9% in this market. So what we're speaking to is interest in our markets and relative stability as a result of reforms that have been carried out on the monetary side.
Okay, so looking at the macro, not just macro snapshot there, monetary policy rate, that's at 26.5%. Inflation rate from the last number, 15.38%. Exchange rate, 1348, that's according to the CBN data. 91-day NTB, 15.95%. Then the NOF rate, that's the interbank rate.
Oh, yes.
Now we have a solid standard number.
Transparent, one single number.
What's that doing for the banks? Because definitely, you know, we thought we were the only ones that have to borrow, as customers borrowing from the banks. But apparently the banks borrow from the banks.
Oh, yes.
And now they have a rate.
It's 22%. A benchmark rate, and it's very important to our international clients who want to bring in dollars and exchange for naira. We call it interest rate differential. I'm giving you dollars at 5 or 6%. You're giving me naira at, say, 22%. If I'm calling 5 banks and they're quoting different rates, we're not having a realistic market. So what we have done with this one, between FMDA and the central bank, is to take out outlying prices, the outliers, to find a representing price that is, you know, close to what we can deal with. And just like we did on NFM, that is the foreign exchange, the rate that is quoted on the central bank site today is a dealable rate with very little margin of error.
Okay.
On naira and dollars.
Naira and dollars. So looking at the close yesterday, Nigeria FX rates, we see the NFM rate up by 0.17% close. CBN closing rate, that was about 1348, 0.21% higher. So mostly in the green there for the
naira.
That's for the naira in the official window. But I'm hearing gists on the parallel side. The unofficial market, the BDCs. What's happening there, really?
We call that market the alternative market. The real market is the eFirms market, where cyclical movements are happening between 1340. A lot of people quickly bring in their demands to buy. And then when it pushes to about 1380, 1390, demand slows. So we have a band or a range where the market is comfortable with, and it's predictable. At, say, an average of 1350, or worst case, when Nigeria's budget is currently planned at 1,400, just 50 naira away from. I mean, and that's where parallel market is. Yesterday was 1398 at 14 levels, and it's not shifting, you know, like the kind of swings we used to have, and the kind of variations we used to have in like 4-5 rates. Right now, you can ask anybody who is not even in the market, and they tell you naira is at 14, and that's a workable estimate. And it's stable. And it's been at that for over 18 months.
Right. And I mean, what's the trend normally in a pre-election year?
We used to have a lot of pressure when going into, before COVID, I think we were at 360. We shifted to 420, gradually into 500, 700s. And official was kept at 420 or 460. But parallel market just simply drifted away. And then we still have different rate for pilgrimage. And then in the alternative market, you have BDC for small amounts, and then for transfer market, you had separate rates, about 4 or 5 different rates. But right now, I can tell you, with 1350, you will get money in the market at eFirms. Whatever is happening at the alternate market is expected to happen that way, based on demand and supply. Our concern is that it shouldn't move too far away from the official market, which is at 1350.
Okay, so, you know, technically, we know the stock exchange has been getting a lot of attention.
Oh, yes.
So far. We're seeing a lot of people talking about it on social media at this point. But I know there are still some retail investors that want to also play in the fixed income market. What advice do you have for, you know, those kind of people trying to make money in the fixed income market?
There's retail products where, of course, it's 50 million for going directly to bond options and bills options. So that takes out people who have lesser than that. But most banks and asset managers have created products that helps them to cascade into smaller amounts. making free adverts, you know
Right.
the bank to approach for small amounts. So
what are they
bank
getting
asset
for
manager.
retail? Like 18%? What are they getting?
For retail, you can look at something like around 15% on fixed income. If you have 5, 10 million, even 1 million, some banks will show you treasury bills for 1 million naira at 15%.
Right.
Which is good
and
return.
they also have pooling.
Oh yes,
They
so
can
they
pool
pool to help
resources.
you cascade down, to break it down into retail customers, and that's why we're there.
Right. All right, what are we seeing next week, the market?
Bond auction.
What are you expecting?
That's towards the end of the month. This is the beginning of a new quarter. On the external reserve side, we've seen a decline from about $50 billion to $48.5 billion, mainly due to statutory payments from March 13th. We noticed that drop started from March 13th, so it clicks, and we know it's statutory payments. But going into bond auction, the demand is going to be high. Market is trading at upper end of 16%. It could close at 17%. There's a particular bond to watch there. 2035 bond, that coupon is as high as 22%. It's trading at a premium, so for every 1 billion issued by the DMO, because it's trading at a premium of probably an excess of 20 naira, they will raise extra cash. So that helps them to fund this year's budget, which is the largest we've ever seen, 68 trillion. And about 20% of that is probably going into debt servicing. So it's Herculean, but it speaks to, a huge chunk of that has been dedicated to capital projects, and we hope it helps shift our fiscal corrections.
Right, even though we've seen a big shift when it comes to
energy prices.
The minister of finance,
Yes.
that ministry, we've seen big shifts there.
Oh yes.
So I guess we also feel the impact.
Oh yes, we have absolute
this
confidence in
market.
Taiwo Oyedele, who was my own lecturer personally when I was studying in school.
So I guess the fixed income market is bullish.
Oh yes.
On his appointment.
Oh yes.
All right, we'll definitely keep tracking that. Thank you so much. It's great having you, Mr. Bankole Odusanya, Chief Dealer at Polaris Bank. Thank you for coming on today.
Thank you, laddie.